Rahul, good morning. Thank you for joining us. So, what's your market view? What are you telling your clients? Ride the momentum, or take time to take some chips off the table?
Hi, good morning. I think obviously after a good rally, and I think looks like the markets continue to roar. And I think if we look at two, three factors, which indicates I think the market rally might continue. One is obviously we've seen the volatility being cooled off. The earnings season has ended well, and I think RBI policy also. I think the statement was I think at a pause for a while, and Fed's event is also over. So I think the volatility has been over, and we've been seeing consistent FI participation after a long time. So I feel that the rally might continue. Large caps continue to, has been muted in terms of the way the mid caps have rolled in this rally. So I feel that a lot of sectors, banks, if we look at it, still trading at discount. If I look at 10-year average in terms of P multiple still trading at PSU as well as private. So I think banks will continue, and if we look at Q4 earnings as well, I think the two sectors showed very good performance. Was obviously financials and followed by autos, and we've seen that autos have come back, and we've seen that most of the auto stocks have rallied. So I feel that banks still value from here. Large cap banks have not performed. If I look at the Nifty 52-week high last time when it hit 18.8 or something, and today if I look at, we're just few points away from there. So I think I don't feel that just need to ride it, but I think a lot of opportunities in the large cap space as well. So I feel that still some more upside in the market side. So I continue to stay invested and pick up this selected large cap stocks.
Rahul, that point is taken, but let's also talk about the stocks which are there on editor's radar. Nikunj, what are you spotting? Because a lot of areas of interest at this point of time, you have metal stocks which have been rallying in the last 1 month. Do you think this rally is going to be a bit more sustainable, or is it just a tactical trade on metals?
All right, so let's look at the construct. Why do we have metals, and why I think that metals should be on everyone's radar. The basic fundamental factor here is that China and metal stocks, whether it's psychological or real, but in the short term, the correlation that Chinese demand will come back has always excited metal stocks. China has slashed short-term rates by 1.9% to about 2%, and this is the first rate cut since August 2022. So the metals is always a macro trade, and in that macro trade, if you throw in the whole China angle, metal stocks, they tend to outperform always because of that. B, international coal prices have come down, which again is a very big hurrah for metal prices. And C, metal prices are always dollar denominated, which means that if you look at the price realization, what some of the metal companies they enjoy, it's always dollar denominated. In fact, I think it was a couple of days ago, metal companies have also increased the prices. They've increased the prices for steel, which has been supplied to autos, and these are long-term contracts which have been renegotiated to the tune of about 3 to 5%. So that's one space which I think in the near term, I definitely see that there is going to be a lot of pent-up demand, so to speak. So that's one space which I think is on my radar.
So metal stocks definitely on the radar, a lot of tailwinds for that, so we are watching out for that. But one sector, or rather a couple of stocks which are lagging the tailwind at this point of time is the HDFC twins. We have all been waiting for that merger to happen, but before that there seems to be some roadblocks as well. Nikunj, how important do you think can be this announcement that there might not be an extension of 10% cap? Could this be very, very material and result in heavy selling?
Anisha, what we understand is that there are 60 schemes which, once the merger goes through, they actually would be paring down their positions in HDFC Bank or HDFC Limited. Now, SEBI has given them a window. This source-based story though. SEBI may give them a window, a 60-day window, where they will have to go as per the compliance, or they will have to follow that 10% exposure, and they'll have to bring it down to 10%. So what will happen is, while the stock is underperforming because of this merger, a lot of funds in the run-up to the merger, they may not wait for the merger to go through. They may actually change their positions in the run-up to the merger. So I see HDFC Bank as a stock which may actually underperform in the run up to the merger, and it could be a case of buy the rumor and sell the news. So while markets are anticipating and expecting selling post the merger, when the shares when the mutual funds will be given a time window to reduce it, I think it really could be the other way around, where markets would preempt the positioning, and in the run up to the merger, now that the record date is out, I think you could actually see selling. What it means that HDFC Bank, even though it's attractive, it is growing, it is underperforming, and I think till the time the merger process does not go through entirely, there would be more supply and there would be less demand. Technical factors here, but technical factors do play an important role in the short term.
Technical factors might keep the stock under pressure. That's about the HDFC twins. But Rahul, would you use this pressure, temporary technical pressure, to buy for the long term? Or would you wait by and let the merger fructify, given the fact that the merger is expected to slow down the growth, at least in the near term?
I think I would definitely participate at this juncture. I think the stock has underperformed in this rally. If I look at it, last 3-4 months performance as well. And in the end, if we look at, these are all technical factors, and which is a matter of a month or so. But if I have to look at beyond that, then I think this will definitely prevail better, and fundamentals prevails what we've seen in most of the stocks. And I think these are all discounted now in terms of it, and this kind of selling what we are expecting is not so great. So I think with a stock like HDFC Twins, and I don't think so this underperformance will last for a long. So and then in such kind of a markets where we are almost at high, so I think the kind of safety, if we look at it, margin of safety, I think this HDFC Twins provides it. And then if we look at again the financials at the best, going through one of the best times, so I feel the HDFC Twins should be a very good opportunity in this kind of a markets.
Okay. Zomato reversed yesterday. Naresh, is the best of the gain in Zomato over?
I would say in the near term, yes. Say the last spike was 75 to 78 levels, which was there in last year June. We've went above a bit, and now we've taken a pause. But the fact is, structurally, the trend has changed. I don't expect it to be a runaway stock, but going forward again at 65, that would be a price point where you want to buy into it. 65, 68 levels if it comes through. But technically, the trend has changed. We've spent 12 to 18 months of consolidation. The initial move from 55 to 75 is done. I would expect it to take a pause here at 70 to 80 levels, 67 to 80 for some time to come, at least maybe a few weeks or even a month or two. And post that, maybe again start a new rally towards the 100 mark. So technically, the structure is positive. But given that we had a 40% move in the last couple of months, a little bit of a pause for a few weeks is what I expect going forward.
Okay, so that's the technical view on some of the new age tech stocks, but what's the fundamental view and what's the take coming in from Sanjeev Bhasin? Listen in.
If we see the personal care and the beauty segment, it has miles to go in our country, because we are just coming of age, and I think that the spending patterns have changed. So we have two picks in our portfolio in the fintech stroke new listed stocks, that's Zomato and Paytm. Nykaa is something which we've been tracking, and we will get back after we analyze these numbers. Zomato is a new no-brainer as far as the restaurant goes. It keeps your kitchen alive. Secondly, they're now outreaching a lot of the reaches where margins may fall, but the breadth and the volumes will pick up. So I think if you have a 2-year perspective, you can easily see your money double. Same is with Paytm. They've invested a lot in technology, and they think that the reach to vendors and the small ticket buyers of kiranas is where their money lies. So they have an NBFC or a financial arm in the offing. I think that once they get approval, this stock can be a huge outperformer.
Very happy to know that ET Now is going to be celebrating its 14th anniversary. It's a channel which has established a brand and reputation of its own, become a channel of choice, so to say, for business viewers. And I wish them all the best and good success in the years ahead.
Okay, let's take stock of some of the other movers as well. And Wipro is one stock on my radar. And the reason is that today is the last day to be eligible for that buyback. And that buyback is something that has been providing support, as we've been pointing out. The stock has rallied almost 10% since that April announcement came in for the buyback details. But history tells us that post the announcement, 3 out of 4 times, the stock has fallen anywhere between 9 to 18% within the next 3 to 9 months. Rahul, what's your view on Wipro specifically? And if you had to take a top bet within the IT pack, which would be that stock?
I think obviously post whenever we see this kind of a buybacks and the stock has rallied, and if you look at most of the IT names, post their numbers have rallied after the immediate sell-off. If you look at from Infi, TCS, HCL, and a couple of few mid-cap names have rallied quite a bit. So my sense is obviously this might take a breather from here, and definitely Wipro amongst the stock list. I think if I have to look at in my portfolio, then I think my preference will not be a Wipro at this price. So I think I would definitely suggest post your buyback. I think the stock might correct or might underperform the vis-a-vis entire IT pack. So I think that's one of it. And secondly, I think if I have to play into the large cap IT names, then I think Infi would be a preferred bet. HCL Tech would be a preferred bet with the valuations which are trading right now. And then where we are seeing the performance in the Nasdaq, I think same thing is usually followed in most of the Indian IT names as well. And if we see this has been reflected and most of the IT companies have done well. So I feel that Infi and HCL remains a preferred bet in the IT space.
Breakdown shares, Bandhan Bank, Canara Bank, Go Fashion. Kunal, is the steam out of some of the PSU banks? Canara Bank, Union Bank, UCO Bank, we don't discuss them now, right?
Yeah, I think for a moment these stocks have gone into a pause. But in fact, I was looking at the charts for SBI yesterday, and the stock is now very close towards its oversold nature in terms of indicators. So what I believe is that every sector where we've seen an uptrend, whether it's the high beta sectors like real estate and autos and metals, etc., there have been leaders which have emerged, which have managed to lead the rally first, and then there have been stocks which have managed to chug along. Now the only case or point of concern for the PSU banking stocks is that even the leaders like SBI, Bank of Baroda, Canara Bank, etc., in terms of price performance, these stocks have been an underperformer or in a consolidative band. So I think that's the only concern where the market sentiment is not getting a leg up, where you're seeing the sentiment pushing across to the tier 2, tier 3 names from the PSU banking pack. Hopefully, I think with SPI very close towards an oversold nature in terms of indicators, if the stock tends to bottom out and see a rally, I would believe that the action could pick up into the PSU banking pack. So maybe another week or of consolidation, but I think post that we could probably expect a decent pickup of price action into this pocket as well.
A couple of smaller names which are going to be in focus perhaps today are the likes of VMart and Pro Solutions, because as we have been pointing out, marquee investors have been checking into these names. So for VMart, Amansa Holdings of Akash Prakash is something which is checked in, and for Orient Pro, it's Malabar India Fund which has bought some stake. Nuresh, do you have a view on either of the counters, Orient Pro as well as VMart?
Orient Pro has actually been a surprise in terms of the price action it has seen over the last, say, couple of months. The stock was at 350 back in May, and the stock has already gone up to almost 900, 950 levels in less than 2 months. So after this deal, it could see some more momentum, but the risk reward is not great. The stock has had a one-way rally, so I would avoid it. VMart is the interesting one because the stock has gone through a correction of almost 50% from the top. And yesterday we've seen a big price and volume uptick. If it can sustain 2250, that would make it a short-term bottom in place. So that's the interesting stock because the stock is at the same place where it was COVID also. So 50% correction from the top looks interesting for a bounce back.
Malabar, Sumit Nagar, Madhuri Madhusudan Kela, the good old Madhu Kela, Amansa Holding, Akash Prakash, Plutus Wealth Management. It's a large fund based out of Dubai. I mean, they've got offices in UK and Dubai. Never met the management. Value Quest, dear friend of ET Now, Ravi Dharmeshi. Bottom line, the smart guys, HNIs, they're buying into stocks. They're buying into mid-cap stocks. They're buying into names where there is definitely a very different kind of a proposition. Meanwhile, in the FI window, looks like Bain has exited more of the ownership in Axis Bank. 1.8 crore shares in Axis Bank has traded in 6 blocks. Now, Bain had invested a very chunky stake in Axis Bank, and now looks like they've exited earlier and they're exiting now. Rahul, what's your view on Axis Bank? I mean, this is one bank which, in a sense, has really got the mojo right.
So I think post this Q4 numbers, if you look at the stock has almost rallied 15%, at least 12 to 15% if I look at it. And I think post this Bain Capital deal, I think the deal is not so great in terms of the size of the deal. What I'm saying is, so my sense is I think the stock has underperformed. If you look at it in the entire private sector banks in last 1 year, if I look at or pre-COVID, if I look at it, so I feel that the valuations are justified, and I think still some more upside. And I think this is what the this is usually whenever the markets are doing well or something, we see that's the risk of Bain Capital coming into it. So I think my sense is I think it should be easily absorbed, and I think if it goes down, I think it should be a good opportunity to buy Axis Bank at this levels. There could be another 15 to 20% upside more in the next 8 to 1 year.
It's about Axis Bank, and you should watch out for that. But Kunal, today there is the entire RPG group which is holding their group investor meetings, etc. So a lot of stocks actually have made decent amount of wealth, whether it is Zensar Tech for that matter, RPG Life Sciences, etc. as well, KEC for that matter. Is there any name from this group that you like?
Zensar, KEC, I think both these stocks are reasonably strong in terms of their trends. KEC, in fact, I think yesterday made a fresh multi-month, multi-week high, crossing that level of 580, even though the stock did not close at the 580 levels, but there was an intraday breakout for the stock. Looks attractive as a setup, more from a medium-term perspective. And I think KEC and such of the names have done reasonably well for themselves over the last many years. You look at the charts consistently over the last 5 to 7 years, these stocks have given you, steady returns over that kind of a time span. Even Zensar Tech, I think over the near-term charts looks very attractive. So there has been, a strong bifurcation for the markets towards the mid-cap IT names, which have definitely outperformed the large-cap IT stocks in this last 2-3 months of price calibration. So from the mid-cap IT names, Zensar Tech, Cyient, many of these stocks have managed to show some very good price action. So I would probably believe that it's always better to go with the price performers or the leaders in sectors in terms of price performance, and Zensar Tech, Cyient, etc. are few of the names in that pocket.
Rahul, what's your view on the hospital space? Because of late we have seen a massive outperformance of hospitals versus the entire pharma sector, or even the healthcare index for that matter, and Nifty as well. Do you think the positives are priced in right now, or would you still be a buyer in the hospital names?
I think a lot of stocks, I think the one being the Apollo Hospital being the outperformer, and I think this we have always seen a re-rating whenever in last few months. So I feel that this stock should continue and do well, and it should be, and obviously the stock has rallied a lot, so I feel that it should be a part of the portfolio. But near term, I don't think so that could be a in near term, but if you're a long-term investor, yes, we should have. And then I think if we look at entire healthcare index, as you rightly pointed out, versus the pharma pack, I think the pharma pack's numbers were quite muted with a few stocks. So I feel that still space is there that I think one should stay invested in Apollo Hospital.
Yesterday started moving higher. This is one stock which in a sense has got chopped largely because of what the court case is. But one stock which has really hit out of the park, I guess, post-COVID is Narayana Healthcare or NH Healthcare now. Medanta has done very well for itself. It was a late bloomer, went public very late. That's Narayana Healthcare for you. Last 1 month. Global Health, that's 57%. Now some of these hospital stocks today are commanding P multiples of consumer companies, and the big difference is that healthcare is still a high capex business. Healthcare is where you still have a bit of a regulatory challenge. We are forgetting that there was a time when the total cap on the heart operation, angioplasty had come through. The heart stents, the government had to step in because that procedure had become very expensive. Similarly, in the case of other procedures also, there is a bit of a reluctance in terms of charging free pricing. B, hospitals do require a lot of capex as they have to expand. see there is a profit sharing which I think is clearly there in terms of how much hospitals actually keep back and how much they share with some of the good doctors. And last but not the least, my concern with some of the hospital stocks always has been that where is the talent? And if one really looks at a strong attrition rate, and especially when it comes to daycare and nursing care, there is a strong attrition and a very strong wage inflation. Hospitals are exactly going the way how the IT sector moved, where suddenly there was an influx of demand and there was no talent. And Rahul, that's my only concern here. It's a high capex dominated business. There is lack of talent and there is a lot of attrition.
I think, Nikunj, I think very few organized players are there in this sector. If I look at it, I think bearing apart 5-6 teams, as you mentioned, and a couple of them more, and that would be also a regional play kind of a stuff. So I think which is there, but I think as and when we see the penetration more happening on this, like just to give an example, 10 year back, if we look at Apollo hospitals and way things are, but I think there has always been a market for most of the other names which have also come along with it. So I think, as you rightly pointed, but I think still this will continue to do well. And as you rightly pointed out, one more thing about this stocks are trading at a very high valuations like a consumer companies. But I think the kind of sustainability of growth, which also looks like in this kind of a business. So I think this will continue to do well at least couple of years from here. And I think at declines, one should definitely look at the large names like Apollo, as I mentioned earlier.
One buzzing space, and perhaps the only one yesterday, was metals, right? After, China's central bank cutting rates, talks about a stimulus, it really gave a fillip to the metals sector. Although, Kunal, the question is whether the move in metals yesterday looks durable or not.
I think it looks durable, and especially I think if you concentrate on the large cap names or the more moderate beta stocks like JSW Steel, I would still believe that there could be a decent upside into that stock from 675, 680 levels. I think almost a couple of weeks back, the stock has jumped up to 775. In fact, on a day like yesterday, most of the metal stocks had shown tepid performance of 1.5% odd percent. JSW Steel outperformed on an intraday basis. The stock came back towards, I think, 775, 780 odd marks. So I believe that that's a more stronger, more formidable name. It's confirmed a breakout on multiple time frames, especially on the short term as well as on the medium term charts, much prior to the other metal stocks. And I think that's the advantage which most of the sectors, they tend to get benefit, because when you have certain set of stocks which tend to lead the breakout or be the first in terms of a breakout, they are the ones which tend to get premium, and the premium sustains for these stocks for a good enough of time. So I would believe that in that regards, JSW Steel could be a preferred bet, and expecting in this round of rally, the stock to cross over the 800, 850 mark.
Okay, so that was about some of the metal names that we are watching out for at this point of time. But the other space which has been quite excited is the entire auto pack, right? And this entire MG stake sale and some of the companies coming to buy that out is also expected to bring the buzz back, as well as the EV is concerned. What's your take, Rahul, as to which are the companies which are leading this entire EV transition, which are the beneficiaries of that? And is it again price it into stock prices or not? Because all the stocks have run up considerably.
So I think, as you rightly pointed, post Q4 numbers, I think we have seen most of the stocks done quite well, be it two-wheelers or a four-wheeler. So I still feel that stock, like say, if you have to talk about EVs, then I think the best play to play is obviously Tata Motors. The stock has already rallied in last 1 month or so if you look at post earnings. So I think Tata Motors, with the launch of their new EV space, new EV vehicles as well, and passenger vehicles, what we feel that I think this will continue well. Obviously the JLR number also and the JLR update also, which they came up a couple of days back, were quite promising. So I feel that Tata Motors remains the top bets in this entire space. Followed by I think if we should also look at Maruti in a domestic passenger vehicle space. I think the stock has just hardly performed. If I look at it last 1 year or so, I think the valuation has been trading with the launch of 5 new launches which they have in next 2 years. So I think, and then 2 in the EV space, which looks quite promising. So I feel that this versus reward, still Tata Motors remains one of the preferred bet. Maruti remains a preferred bet in this entire auto play.
Okay, Rahul, stay with us. Some more questions coming up for you, but here's your chance to unlock a golden opportunity with ET Now on our 14th birthday. Here's a gift for you. All you have to do is participate in ET Now's Force of 14 contest and stand a chance to win 14 gold vouchers. On our 14th birthday, all you have to do is watch ET Now through the week, give us a missed call on 888-665-9273 and grab the golden chance to get your chance to win gold. Well, pay attention now because today's first question is, which show on ET Now gets you the latest from the startup world? Your options are A, Startup Digest, B, Startup India, C, Startup Nation, and D, Startup Central.